Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live. And if you're familiar with my channel, normally I do live trading, teaching, and mentoring during the last hour of the market. But tonight I'm doing something that I've never done before, and I am interviewing my first guest. And I have a lot of people that ask me about the VIX, detailed questions about the VIX and trading volatility. And I am not an expert in that, but I have a friend of mine who is. His name is Dave Lincoln. He is from the Famis Dave YouTube channel. I will put links in the description. And Dave Lincoln, thank you for being here today. Appreciate it.
Nice to see you again, Greg. This is it's good. We had a conversation a few weeks ago, and now we can kind of continue it a little bit. That's great.
Absolutely. But now I get to ask you questions.
Cool.
So, as I mentioned before, you do trade the volatility. You specialize in trading the VIX, which I find interesting, really interesting. With so many different things to trade, Dave has focused on volatility. And tell us a little bit about how you got into the market and how you ended up trading volatility.
Sure. Yeah. Well, I grew up and was always interested in the market when I was young, and so I ended up in college in working for a brokerage firm, and I was basically helping a stockbroker to find rich people to cold call. And I always thought to myself, I don't want to be like a stockbroker or something. I want to be the guy that actually decides what you do with the money once you collect it. I don't want to be the guy that's like finding people to collect money from. That didn't sound like fun to me. I wanted to be the one who decided what you do with the money. And so through actually the old boy network of a fraternity brother, I ended up getting a runner job at the CBOE in Chicago Board Options Exchange, and worked my way up from being a runner to clerking for free for a market maker down there. And then I got hired by a good firm. They spent time and money. They sent me to California for a year and trained me how to be an option trader. And I had a great career as an options trader. I was there for like 12 years at the CBOE. Through the 90s. I kind of miss I kind of feel like I missed the golden days of like the late 80s, but I caught the tail end of really a great time in the markets. And I ended up actually getting away from it after a while. I worked, as everything got computerized, things got pretty hard for floor traders in the early 2000s with the .com. 2000, 2001, people are familiar with the market kind of going south for a while then. They called it, I think, the .com bubble burst. Yep. I ended up switching products. I switched firms and I switched products. I went into trading 30-year bond options at the Chicago Board of Trade, 10-year bond options, and I ended up actually completely leaving the market for a long time. But you know, when you're somebody who's into trading, you can try to leave the market, but you know, I woke up I came to at a moment at some point, and I was like, wait a second, and I went online. And I was like, hey, I could actually set up an option trading account online, and it all kind of came back to me. And I was interested in ETFs because those were something new to me that we didn't have back then, and I started looking at leveraged ETFs like NGAS and DGAS, which are natural gas leverage ETFs, and I was interested in the fact that these leverage ETFs they seem to decay, right? If you've got a triple leverage ETF, over time it slowly goes down. So I started thinking to myself, like, there must be some way you can take advantage of that. Like, could you sell both ETFs or something, or could you sell calls? You know, I had experience in trading options, so I was like, could I sell calls on both NGAS and DGAS and make money that way? And it brought me down this rabbit hole of like, well, what other leverage products are there out there? And I went back. I had traded actively the NASDAQ and the S&P, the SPX, and had supported traders in those products. So I was familiar with like futures and the futures term structure, and I knew about oil trading, and I found these VIX products that had not only did they have that decay from like being leveraged, we call it sort of beta drift when you have a leveraged product that sort of decays because it has to be rebalanced every day. They also had these other unique characteristics about them that made them really fascinating for me, and I dug deep down into these VIX products. And when I was at the SIBO, we heard about the VIX, but it was just kind of like an indicator. Like it came out around in like the mid to late 90s, and in our minds, it was just like it basically told you like what the volatility of the S&P 500 was. That's the way we thought of it. And we were trading high vol stocks like 90, 100 vol. For earnings, they might go up to like 300, 500 vol. And so the VIX seemed pretty boring. It was like, it was around 17 or something then. And there weren't VIX products back then, but now there are, and it's one of the youngest products out there actually in finance. I mean, it's not super young, but it only really came about, like I said, in the late 90s. And so it's a really unique product in that there's a couple variables that that stocks have that it doesn't have that give you just a little bit more of a kind of a defined playground to play in. For example, the VIX only stays between like 9 and 20 most of the time. It's not like a stock where it can run away to the upside and just take off and split and stuff. You know that if it goes up, it's coming back down. And it has some other characteristics like that are just, it just gives you a little bit more of a handle on things as far as I'm concerned.
Well, volatility goes up and volatility goes down. I mean, that is like death and taxes, right?
Indeed.
So how do you express your trades on the VIX? Do you go long the trades? Do you take actual directional positions? Do you buy puts, sell calls? How do you kind of 30,000 foot view of when you size up looking to take a position in the VIX? How do you do it? I mean, I trade VIX just like normal people. I just buy it, right, and I sell it. But I know you have a more advanced way to express the trades.
Well, the thing with the VIX is that the VIX itself it's a number that's based on a formula. It's kind of like your credit score or something. It has this formula, and nobody knows exactly what the formula is. We can pretty much figure out where it comes from, but it has this formula, and there's no direct way to trade it. You can't say, okay, I'm going to buy VIX now, because it's not a product. It's just a number that's based on a strip of options in the S&P, the SPX. So, for example, if you were to look at option prices in the SPX, if you were to pick whatever options are the closest to expiration from 30 to 30 days out, that number that you see for the volatility of options in the SPX is basically going to be the price of the VIX, right? So the VIX represents a 30-day out sampling of some options in the S&P 500, and so there's no way to actually directly trade it, but what they do have are VIX futures. And VIX futures, a future is a contract that you can buy or sell, and it has a fixed date that it ends. Yep. So, and the way that VIX futures relate to the VIX is on that ending day, the VIX future will have the same price as the VIX. But before then, it can kind of float around. It's just based on supply and demand, and there's and thus this creates sort of inefficiencies, and it creates kind of a chaotic thing. Now, if you've got if you compare that to like the S&P 500, the S&P 500 has futures too, but there is what we call arbitrage between the futures price and the spot S&P price. So, for example, if the S&P is, if the SPX is 3,000, then sorry, I just lost my mic there for a second. If the SPX is 3,000, if the futures go up to say like 3,005, what you could do is you could sell a future, and then you could buy a basket of stocks that represented the S&P, and you could collect that $5 difference between the futures 3005 and the SPX 3000.
Right.
And because of that ability to do that, the two stay close together, the futures and the S&P. Pretty much the only difference between the price of the futures, S&P futures, and the spot S&P is the cost of carry, or the amount of money it costs you to borrow money to buy a future. So if you're dealing with the S&P 6 months out, it's going to be slightly higher than the S&P now as far as the futures, just because it's going to cost you more money to borrow money to buy that future, to hold it for that longer period of time. But the VIX, there's no real way to like bring this stuff back in line. I mean, you could try to possibly buy some options against the VIX futures or something in the SPX, but it's not very exact. And this is kind of like a unique characteristic about the VIX. And all of that, explaining that to you is just to kind of explain where a lot of the confusion about the VIX comes from, and also a lot of the kind of art to it comes from, because it's figuring out where the futures are in relationship to each other and where they're going to go. That because all of the products, there's a bunch of ETFs that are based on there's the futures. You could trade options on the futures. You could trade the futures, but most retail people will trade one of the VIX ETFs. So it would either be and the VIX ETFs, the majority of them are based on a average of the front 2 month futures. So that is 30 days out. So if the future, a future has an expiration date, like let's say a future started 500 days ago. Once that future gets down to 30 days to go before it's going to be ending, that would be the main future for TVIX, UVXY, VXX. If it gets down to 29 days left for that future, what they do is they average like 1/30th of the month from the next future out. So for right now, it would be right now we're 4 days into the cycle. So it would be 4/30ths of the farther out future, and the rest 26/30ths of the closer future, to average out to 30 days till expiration. So it creates a lot of confusion, because when you see a product like TVIX, it says, all right, that's a 2 times leverage VIX fund. Well, it's not 2 times leverage on the VIX, it's 2 times leverage on that average of the futures.
I see.
So, and like I said, the only thing the futures have directly in common with the VIX is on expiration, the futures will be the same price as the VIX. Before that, they can ebb and flow with supply and demand. So if you're trading the VIX, you want to stay focused on what those futures are doing, and you want to stay focused on the chart that compares the futures to each other, because the VIX itself, of course, if the VIX goes down, the VIX futures are going to probably go down, but they might not, and they might even go up a little bit. So to trade the VIX, you're going to want to dig into VIX futures and start to understand them.
Gotcha.
Bit.
So TVIX, does that actually decay because of the taking into consideration the 2 months?
Well, what we talk about the relationship between the 2 months, and in general, if the VIX is in a normal state, the farther months are going to be a higher price level than the closer months, and that kind of makes sense, because there's more of a chance of something crazy happening in 2 months' time than there is in 1 month time.
Right. Just like if you buy options out longer, it's going to cost you more money in premium. Right.
And the way it works is that these funds are based on the funds are based on an index, but and it's a little bit more complicated than the way I'm going to explain it right now. But you can think of it in your mind as working as that every day as they rebalance. Like I said, today it's going to be worth a certain makeup of these futures, and tomorrow the makeup switches slightly. And as the makeup switches slightly, you're going to be essentially selling a cheaper future and buying a more expensive one. That's not the exact mechanic of it, but essentially you're replacing a future of one price with a future of a higher price. And as you do that, what happens is the future you're replacing is farther away from the VIX. So because of that, the nature of you replacing a future that's closer to the VIX with one that's farther, it creates more room for the future to fall towards the VIX, and that is a source of decay. So, and it's a very good measurable source of decay. And what we do is there's a simple formula for the relationship between the two futures, and it's just the one future, you subtract one future from the other. You can take the absolute value of the difference between the two of those, and you divide that by the price of the front month future, and that's going to give you a number. And if that number is positive, it's going to be a contango number, and if it's negative, it's going to be a backwardation number.
Right.
And that number, let's say it averages somewhere around, like, let's say 5 to 10%, and that is going to be how much these products are going to decay per month. So if it's 10%, that's 10% per month, right? So that's 100% per year they're going to decay. And like I said, usually they're in a state where they're decaying at somewhere between 5 and 10% per month. And so if you pull up any of these products, you're going to see them just going straight down. And indeed, over time, they do go straight down. So that sounds like it would be like a really easy trade, right? You just short these, and and you make your money, and you go home, and there's no problem.
Swim downstream.
Yeah, and but in practice, it becomes a little bit harder because they're going down, but you just don't know when they're going down, and there can be and there's some difficulties with the products. Like, you can't easily short these products because they're hard to borrow. Now, I just to explain, I know most of your people that are watching will know what hard to borrow stock is, but for those who don't, if you want to short a stock, you need to find shares of it somewhere that you to borrow, to short. And if something's hard to borrow, you're either just not allowed to do it, and a lot of smaller traders, whatever their brokerage is just going to say you're not allowed to do that. And so then tough luck. Now, if you've got a decent amount of, if you've got a couple $100,000 to trade with, it's going to be easier for you to find shares. If you got a couple mil to trade with, it's going to be even easier to find shares, and they're going to find you shares. Right. But for the average person, it can be hard to trade these products. And also, there's a big stigma against the VIX. And I think most of your viewers will know that after the crash in 1987, they put a skew in the S&P 500. So option prices are skewed to the downside. And that was a recognition that if you're trading a stock, if there's going to be a violent move, it's going to be to the downside in a stock, right? You're not going to, it's not going to be like, oh my gosh, I can't believe it. It's to the moon. Now, there are examples of stocks that do go to the moon, but more likely than not, if you're going to have a violent move, it's going to be the downside. Well, the VIX is the opposite. If you're going to have a violent move, it's going to be to the upside. And you can have a very violent move. And this tends to make banks and clearing firms and risk managers very nervous, because something happens and it can blow up in your face. And thus, this is added to a list of reasons why people are encouraged not to trade the VIX. And as you might think, when there's lots of reasons not to trade something, a lot of people don't want you to do it, there can be some edge in that trade.
For sure.
It's just that you need to make sure you understand. And the risk management is no different than in any other trading situation. If you're trading with options, then you want to limit your risk, and you want to sample your risk at different levels. What happens if it goes up 100%? What happens if it goes up 500%? You want to have those numbers locked down to the point that's acceptable to you and to whoever's money you're dealing with. But these are some of the things that make the trade a little bit more difficult than just shorting something and going away. So the answer for people is to either they will short these products, but they'll leave a lot of cash on the side just in case, or they will apply some sort of option strategy, like buy out of the money calls against their position. What I do is I use spreads. So I would buy one put and sell another. That way I know how much it's gonna, how much I'm risking. If you buy a put spread, the most you can lose is what you pay for it. And so, and the second problem, of course, with the VIX is that you know it's going down, you just don't know when. So you want to leave yourself just enough time to weather the up or the sideways moves before, and then when it goes down, you're going to make money. But you can feel pretty confident that A, if you wait long enough, it is going to go down, and B, if it is in the middle of a huge spike, that if you jump on board, short it, you're going to make money. And those two little things are different than stocks, and they're these little things that make the product it just subtracts that one or two variables that other products you have to deal with, and it makes it intriguing, at least to me.
Right. So I know from watching your YouTube channel, you know, and you can elaborate on this, but I know you always look at the term structure of what's going on to see what the level of contango. And I believe when the level of contango is high, that's when you start expressing your trades with the puts.
Well, I look more actually to, I guess you could say that when the level of contango is high, it means that stuff is at that moment, there's potential, there's good potential, and stuff is decaying rapidly. But a lot of times, what I like to do is to kind of wait for there to be some sort of event that makes the VIX pop, and then I like to jump on board. And maybe I'll jump on board for 6 months, maybe I'll jump on board for a week, but I like to wait for something to happen, because the VIX itself just goes up and down. It doesn't decay, it just goes up and down. The lowest since I've been trading it's gotten to is I think it was 859 a few years ago. I've been doing this now since 2016, and so I'm not afraid to trade it when the term structure is in a different shape, because usually if the term structure is not in steep contango, if it's in backwardation, which is the opposite, it means you're somewhere in the middle of a spike and it's going to move lower soon. Usually a spike only lasts, I think the average spike lasts like 48 hours. So, yeah, you know, what we had was a mega situation recently.
Yes, we did.
And those things will happen, and you kind of got to get burned to learn. I almost got in real big trouble. There was something called the Volmageddon in February of 2018.
I remember.
And I got lucky and was able to cover I was naked short about 22 calls in UVXY, and I got just lucky. And I started like, I didn't understand what was going on. I went in with a market order, which I never do, and just covered. I said, market, buy my calls in. I bought my calls in, and like an hour later, it had a mega spike. And ever since then, I don't mess around with undefined trades, meaning I'm never naked short calls. Yep.
Defined risk. Yeah.
Yep. I'm never naked short calls. I'm never just short one of the underlyings. In fact, I don't really trade the underlyings at all. I just put on options trades. Because, I mean, it was back in 2017, 2018, I was with a group of guys on StockTwits, and everybody was shorting the VIX, and everybody was making tons of money. And, you know, one guy even like wrote a book saying like, you know, this is the trade, you know, this is what you should do with all of your income, is you should have a short position in, you know, in TVIX. Or actually, at the time, UVXY was the same leverage as TVIX. They kind of nerfed it afterwards. They nerfed the and by that I mean they reduced the leverage of UVXY from 2 times to 1.5 times after the Volmageddon. But yeah, so the basic products are TVIX, which is not optionable, which is 2 times leverage. UVXY, which is 1.5 times leverage but has options. VXX, which is 1 times leverage.
Yes.
SVXY, which is an inverse. So XVXY actually goes up over time, but that's only 0.5 leverage. And then there's some other smaller products. The other kind of main one is ZIV, which is actually ZIV is looking at futures in the middle of the term structure, so it's like 4, 5, 6 months out. So that's a little bit different.
So when you do your spreads, what's the underlying that you're doing your option spreads on? Is it VXX? Is it?
I only trade VXX now, and the reason for that is because UVXY has become very illiquid. The options are pretty wide and they're pretty illiquid all the time, and it's very difficult to get in and out of trades in there. And so it's become very difficult to manage. Of course, if you know your markets really well and you want to put limit orders in, then nobody's telling you what to do, and you can get the prices that you want possibly. But I find that VXX has more liquidity, and essentially the average trade I will do is I will put on a spread that's somewhere pretty close to at the money. So if, for example, VXX right now, let's say in the 30s, and I think it closed 34 and change today. So I might pick a spread that's 6 months out. I might pick like the 32.28 put spread that's a few months out, 6 months out, and just put that spread on, but give myself plenty of time. Give myself like 6 months, and it could come in way before then. You know, if things go well and you get and vol comes in and there's a lot of contango, then you could be able to close that out for a good profit way before then. But if there's a spike or something, you're gonna take a loss on paper, but you're giving yourself plenty of time for it to come back. And what I've learned over time is to not be aggressive. Don't try to which is true for anything, but don't try to do a trade that's gonna be like 100% winner, but pick stuff that is whatever month I'm considering, go a month farther out in time.
That's
whatever
the rule.
Strikes I'm considering. Yeah, whatever strikes I'm considering, roll up another 2 strikes.
Okay.
And I think if you talk to a lot of VIX traders, you'll find that the more successful people are the people that kind of take a conservative approach. Remember, if you make 40% per year, if you could make 40% per year, you'd be one of the winningest traders in the world. You'd
Absolutely.
be Ray Dalio or one of these guys. So
absolutely,
if you set yourself up to make 20% per year, that would be wonderful, and certainly for somebody who's just getting their feet wet, to make 20% a year would be a wonderful thing. Now, it's hard. I know it's hard for new traders to accept that, though, because people want to make money all the time. But I certainly, as a market maker at the SIBO, I came from a very high risk environment where we were encouraged to take a lot of risk, and we would make a lot of money sometimes. But now that I'm like a little older and I'm less willing to like roll the dice and bet my whole life on one trade, and I've become more conservative. But I feel like I found something that I kind of understand a little bit, and it's not. I can come in to the day and kind of have a game plan, feel comfortable. And, for those of you watching, the VIX might not be that for you. It might be something else. But everybody, I think, finds a little something that they can kind of wrap their arms around and get comfortable with.
That's right. Just you gotta find your niche, and you found yours. And I mean, your YouTube channel, Famis Dave, I listen to it all the time, and I find it very interesting, and I've learned a lot more about the VIX. And I would recommend going to Dave's channel, listen to it. They're not that long. I sometimes they're 10 minutes, sometimes they're 50 minutes, but I always learn something, and I know a whole lot more about the VIX now than I did. So, and Dave talks about the market conditions in general, all sorts of stuff, just really good, clever, interesting conversations. So I hope people who are watching are going to go there, subscribe, and watch what you do.
Well, thanks a lot. Yeah, when I was trained as a trader, I said I was trained by a very successful market making firm, and they sent us to California where the partners were for a full year. And what they would say to us was, we are going to expose you to a bunch of traders who do stuff differently. And some of them are going to be, they're going to be very different in their approach. Some people are going to be very much into like risk reward. I'm betting 3 to make 5. This is the ratio of what I'm doing. Other people are going to be very focused on levels. You know, they're going to look at their charts, and they're going to be focused on they're going to have, like, if they're trading an auto stock, they're going to be focused on that industry. They're going to be an expert in every stock in that industry, and they're going to be picking levels on the charts. Other people are going to be making an analysis of volatility. They're going to say, okay, the stock, you know, are the options in this stock in the low, medium, or high level in volatility historically for where this stock is traded over or the whole time it's traded. And if they're in the low range, I'm going to buy stuff. If they're in the high range, I'm going to sell stuff. And they're going to be focused all just on like buying or selling Vega, that being like longer term options, volatility. And what they said to us was like, you're going to see a whole bunch of people that are successful, and they all do stuff a little bit differently. And we want you to just kind of take that in and take what you can from each person. And so my idea with the channel is to expose people to just one guy, what he does, what he thinks about. And I don't expect people to follow me. I don't expect people to to pattern their trades after me, but I just want it to be what one person thinks about, who's been experienced at trading and who's done this for a while, and hopefully they can get experience from different people. And for me, it's the same thing watching your channel. A lot of what you talk about is stuff that I don't know as much about, and I learn from it. And you never know what that one little thing in your toolbox is going to be that gives you that insight at that moment.
I 100% agree. I 100% agree. It's just one little thing that you could hear that might just fit in with something that you were not sure about, and that one little piece of information puts it together and makes it all click. Now,
the world makes sense for a moment. You put that trade on, and it's easy for that brief moment in time.
Yeah, there are certain times when we can kind of look at the market or feel the market or understand the market. It doesn't come very often for me, but sometimes it does all make sense, which is probably a good segue into what do you think about this market? I mean, the economy compared to the market. What are your thoughts?
Well, it's hard because I'm not a full-time trader right now. I have a side job. I've slowly transitioned my way back into trading, but pretty much any money that I've been making trading has been to grow the account. And so, I've kept side jobs. YouTube doesn't make very much money, but it's a passion project thing. But my side jobs are gone. And when you look at the economy, I know, everybody's experiencing the same thing we are. We're sitting at home. It doesn't look very good out there. And all the news on the TV is bad. And, I understand that people, and obviously the country's been very polarized. If you're in the U.S., there's a political, what would you call it, culture wars, I guess. Yeah. And it's just there's this huge amount of news. But if you push that aside for a second, the market seems to be acting like it usually does. It doesn't seem. It seems very, the market seems very normal. It seems like we're just in a typical market situation where we're slowly rallying. At the absence of anything else happening, we're going to rally. Maybe it gets spooked for a day or two, but then it just feels like there's always money flowing into the market. And this is one of the reasons why I wanted to talk to you today, also to see what your sense of it is. But it's very disconcerting to me because, like, if you've been watching me on my channel, I've been talking about being long this stuff, staying long the market, and participating in this rally. But where does this all end? does the market rallying, does that mean that like we're out of the woods as a country? I mean, can we extrapolate that from the market? I don't know. It's really disconcerting, because I would have thought that the market would be doing much worse right now. But I'm always wrong about the market, so I don't know why now being wrong about the market so concerns me. But for some reason it does. It really bugs me.
Well, I recall from one of your shows, we had that first bounce off the bottom, and you did a little informal poll with people, and everyone says we're going down, we're going to retest the bottom, which is what I thought as well. And I think I probably told you that, and you took the counter view and said way too many people are thinking we're going to go down and test the bottom, which, by the way, 60 to 70% of the time you do historically, but you got a read on it where everyone thought it was going to go down. And if I remember correctly, you were quite bullish there, just taking the contrarian view, and you were dead on.
Right. Yeah, I was on it then. But the thing is like, as we approach the highs here, I mean, let's just walk through this for a second. So I wasn't like paying that much attention to the NASDAQ for some reason the last couple of weeks, but it just kind of dawned on me like about a week ago that we are close to taking out the highs in the NASDAQ. I mean, we're only a couple hundred points away from there. Yeah. So what happens if we take out the highs? Does that mean, because if you're looking at it from the side, you would think, okay, well, if the market's at the highs, that means our economy's better than it was before the whole pandemic, but it certainly isn't, right? I mean, and there's only a couple, and people talk about how like we know that like Apple is like, I don't know, some huge percent of like every index, and that there's a few we know Amazon's doing really well, but what does this all mean? And is how about this? What happens if the market is down, if the market crashes tomorrow? And I'm not saying it's gonna, but if the market crashes tomorrow, I'm going to be kicking myself saying I should have realized that this was going to happen, right? We're all going to be, we're going to be kicking ourselves because it seems obvious right now that the market should be going lower, and it's not. And so it's kind of like, I know that if it does go lower, there's going to be some guys out there that are going to be like, yeah, man, I was buying puts the whole time. Of course. Why wouldn't you be buying puts? It was way overvalued. Of course, it's not going to be at the highs after all this. And so I have this, it's messing with my mind, man. You know what I mean? I don't know. I sound like Dennis Hopper or something, but it's,
listen, I agree. I'm a price action trader, which means, I follow my signals on my charts regardless of how I feel personally. If I would have expressed my trades with how I look at everything from a macroeconomic standpoint and everything we've gone through with the shutdown and all this kind of stuff, I bet the farm on the downside. Thank goodness I didn't, right? And I think that's one of the advantages of being a price action trader, is just following what the market's doing and not argue with it. Of course, you have all the support from the Fed and, monetary policy, all this kind of stuff. And, the old saying, don't fight the Fed. But I just can't imagine that there's not going to be some unintended consequences from this somehow. I really don't know, but it is confusing to me. I think about it all the time. And but I got to say, from a technical standpoint, and of course, that's what I do during my live stream today, I was kind of struck by the formations on the large NASDAQ stocks like, Amazon and so forth, where I'm starting to see like Amazon, for instance. We had a false breakout to the upside. We had a false breakout of new highs. Back into the base. We have bearish divergences. We all sorts of bearish indicators that I'm seeing on the big FANG stocks at the moment. And doesn't mean it has to go down tomorrow. These divergences don't mean anything unless they trigger and confirm to the downside, which Amazon did today. I actually shorted Amazon today for that very reason. But I'm starting to see in those kind of stocks some toppiness and some bearish formations, but we'll see.
Well, what about this? What about this thing that that have you heard this thing that like the virus has to like 60% of the public has to be exposed to the virus before it's going to before we're going to have herd immunity, and right now we're at, you know, people say like, I don't know, 5% or something like that. I'm trying to play this out through like next February, March. Where are we going to be as far as earnings and all that is, you know, yeah, obviously, like at least half the jobs that are gone are going to come right back as soon as it kind of reopens, right? It's not that.
I would think so.
Yeah, it's not that. It's just that that you know, it's like the in between, like 3/4 coming back and all the way back is going to be a tough spot, I think, for the U.S.
It is, you know, and I think the markets are pricing it in like it's all going to be perfect. You know, yeah. So there's some arbitrage there. I think patterns are going to change, behavior patterns from people are going to change in lots of different ways that we really cannot forecast. And you know, I think my honest opinion is right now we've had this backstop of the Fed. People are excited about things starting to possibly open. I think we're like in the eye of the hurricane. Personally, we're in that quiet spot with the hurricane all around us, and I think when we do open back up, and you know the PPP, Paycheck Protection Plan, all that goes away, and then the market has to stand on its own merits, not support from the Fed. That's when it's going to be interesting.
Yeah, I mean we don't have. I mean, obviously we can go negative with the rates, but I really don't think Jerome Powell wants to go negative with rates, and I think it does some bad things to do that. Obviously, we can print money. We can always print money, but I like to think of things as like look at what my situation is and extrapolate that to a lot of other people. Like think of myself, I'm like the average person, for example. And for me, it's a huge deal getting that, like, you know, I'm a restaurant worker, so I'm like the most positively affected by the stimulus stuff. Absolutely, right now. Yeah. I get that extra $600 a week, right, on my paycheck, and that's going to end in July. And all of a sudden, you know, I'm trying to pay stuff ahead now, you know, but once that ends, and it doesn't sound like they might give us another $1,200, but that $600 a month is not going to, you know, I think, you know, the $3 billion bill that the House passed, I think had the Democrats wanted to extend that through January, but I don't think that's going to happen. And I'm not saying advocating that they should or shouldn't do that. I'm just saying that like, that's going to be a difference for a lot of people. Not having that extra $600 a month is a huge thing, and it's not only a huge thing for the people that get it, but it's that whole multiplier thing with like you're injecting money into the economy with it. Yeah, of
course, yeah.
And so that ending, I don't know. It just seems too good to be true, and it's been messing with my head lately. And certainly, yeah, I was very bullish when we were down a little bit lower, but as we hit the highs here, I'm much less so. And I don't like to take an opinion. I like to just trade the paper, and the paper's been, I mean, the VIX and everything, the way it's been setting up like this is all over and we're coming off it and everything's fine. But the news is so opposite that.
Is the VIX, I mean, we're, you know, on VXX, we're still, what, 30s?
Well, the VVIX, which is the level of option pricing in VIX options on futures, is still elevated. It's still up in the 120s right now. It might have got down to 118 today. So that's an indicator that we're elevated. But if you look at the spike, we got up to like 85 in the VIX, and now we're back down to like 28. And we've come, you know, we're slowly going back down. You know, it's like there was this huge spike up to like 85 or 89, and now it's slowly just coming back down towards the bottom, which the bottom would be like 15 or something.
Well, let's see, I'm talking about VXX. Let me just look.
VXX right now is 34. Yeah.
That's okay. So 34, that sometimes gets down into the 10 range, right?
So it was like, I think it was like 13 before all this happened.
Yeah,
Like
13. So I mean, we are still quite elevated. Does that tell you anything?
Yeah, but I mean, we're slowly going lower.
Yeah.
We haven't like formed a base or anything. It just,
Right.
yeah. I mean,
Right.
it makes sense to me that we'll stay in, I don't think we would get below 20 in a VIX anyways, but the term structure is righted itself, and we're in contango, and these things will decay like they normally do. The signals, let's just put it this way, signals from the VIX are mixed at best, but it's definitely not, there's not like warning signs coming from that particular spot right now. In fact, it's just been, the realized volatility of the S&P 500 has been pretty low. I mean, it's remember those first couple of weeks, it was whipping around, limit up, limit down, 500 points back and forth. It hasn't been moving around that much. Everything's calmed down a lot with the market, but it just seems like the market is detached from the economy, and I guess it always is in some regard, but the detachment is stark right now, and I guess in a way, maybe maybe the president's a genius and he's figured out how to keep the market going even though there's bad stuff around us or something. Or maybe that is maybe somehow the market being healthy will pull us out of this somehow. Maybe it will help pull the country out of it. But it just, in my mind, it's hard to figure out what the relationship is between the market and the economy. And maybe I should know that being a trader, but I just don't. I don't know what it means.
There's Wall Street and Main Street, and they are disconnected. But, I mean, the market, of course, tries to factor in things in the future. And the market's telling us right now that the markets that will probably be pretty good. I mean, that's what the market's telling us. I mean,
right, and that's what they say on CNBC. They're like, well, that's what this means. But I'm thinking, like, what about sectors? Do you think that there's opportunities if you were to like research, like, well, what products are going to benefit from us coming out from, should we short Zoom? Because they're not going to need Zoom anymore now that we're coming out. I mean,
it's been a little weak lately.
But are there sectors that even if it does roll over are still going to be strong? I mean, obviously, I would say your Amazons are going to be strong, right? I mean, your Google, no matter what.
Yeah. But they may be priced in. I mean, because that was the thinking for a long time, that these are going to be the winners of this, of the issue that we've had.
I mean, is it just keep it simple, stupid? Should we just keep it simple and just stay doing what we're doing? I don't know. It's very disconcerting to me that the market's doing so well.
Well, again, based upon how I trade, I look at risk to rewards. I look at levels. Right. I stay in above them and I get out quickly below them. But when I start to try to overlay my thoughts on where, either from a fundamental or macroeconomic standpoint, I'm always wrong. When I make money is when I follow my rules and follow my signals. When I try to, forecast, I'm usually right, actually, but I'm way early.
I have a certain amount. I mean, I have a certain amount on the sidelines right now because I don't know. I don't want to have my like long-term savings in the market right now. It just feels like, for me, it's kind of a different situation because, my dad has a big portfolio that's way bigger than anything I have. And so that's kind of like, what he does matters to us more than anything I can do. So, So it's kind of moot what I do in a way, but it's I don't know. It just seems like we could have another pullback, I guess. I'm starting to feel more and more of that.
We certainly could. I mean, things don't grow to the sky. I mean, they're they're squeezing it up here pretty high. Like I said before, just my humble opinion, looking at the technicals here, I'm starting to see some concerns for sure. It's going to be interesting.
It doesn't feel like, I was watching this week and it was like the NASDAQ seemed like it was trying to sell off a little bit, but then just nothing happened and it would just melt back upwards. The price action this week, I was just watching the NASDAQ a lot, and it would rip up like 30 points out of nowhere. You know what I mean? It didn't seem like it was a lot of sellers.
Then it gets sold into. Everybody buys it and sells the rally, and that's why we're starting to kind of narrow, chop and get some narrow bars. I mean, it feels like we're driving 20 miles an hour on the freeway, because back in March we were driving 132, and with the volatility in the ranges, and now. So who knows? Maybe it's the storm, the calm before the storm.
Yeah. So I just wanted to ask you while I had you on. I got off of the interview that I did with you last time, and I Googled your name into Google, and I think you know what I'm going to ask you about here.
Yeah.
It said Gregg Gossett, whose father is rumored to be this guy D.B. Cooper. Who was this famous guy, and then I went on this podcast, and it had interviewed you, and it was talking about this. Can you just talk about that just for a second, because I just think it's really fascinating, and
sure.
I feel like I am remiss that, like, if my interviewer who I look up to so much is Howard Stern, and if I was Howard Stern, I would have read everything about you ahead of time, and I wouldn't have missed it, but I missed it before I interviewed you, and I feel bad about it. So I want to.
Oh, no problem.
Catch up on it.
So I mean, in a nutshell, when I was 21 years old, I was living in Salt Lake City with my father. It was my 21st birthday. He asked me to come downstairs. I said, "Hey, what's going on?" And he's like, "Have you ever heard of DB Cooper?" And I said, "DB Cooper." I said, "I think I've heard that name. I think he robbed a bank." And he kind of chuckled and he said, "Well, kind of." I said, Why? Why do you ask? And he said, "Well, I'm going to tell you something. You can't tell your mother. You can't tell Teresa. That's my mother. They were divorced." But he said, I am DB Cooper." And I said, I mean, I was in shock. And I said, "Well, explain this story to me." And he said, "Okay, there was a flight from Seattle, or from Oregon up to Seattle. The person that hijacked the plane gave a note to the flight attendant, says, 'I have a bomb. When we land, I want $200,000 in cash in exchange for the passengers and 4 parachutes.' They did that. They got back on the plane. They were flying, I think, ultimately to Mexico. It was a 727. The back door of the plane opened up, and DB Cooper parachuted out. So this is what my dad told me. He took me over to a file cabinet, had every article, every interview, everything ever magazine done on DB Cooper. And I really regret not being able to ask him more questions, but he told me not to tell anyone. I didn't tell anyone. Years later, he died. I was listening to a coast to coast radio. It was like the 38th anniversary of the DB Cooper hijacking. And I was sitting in my car, and I heard him speaking, and I heard DB Cooper. I'm like, "Oh." So I'm listening, and there was a investigator on there. One of the top, I mean, this whole guy's life revolves around solving the DB Cooper, and he was the guest that was being interviewed. And the host of the show, was interviewing him and said, "Well, maybe somebody out there knows who it is." And I was like, "I think I know who it is." Anyway, so I started to do a little bit more research, and I'll never forget when I looked at the suspect's FBI sketch, and then I looked at a picture of my dad. I got a cold chill up my back. I was like, "Oh my gosh, that is him." So anyway, my dad had passed away. I contacted this investigator. He has now been researching my dad's life and story for 8 years. He's working on a book. I guess it's going to be a big book when it comes out. I'm excited for it to come out, but he firmly believes 100% that my father was D.B. Cooper. And there's, all sorts of little stories that I could tell you where, if I'm really objective about it, I think it would have to be him. None of these make sense. So I think he was. There's a thing called DB Cooperitis where a lot of people think they're DB Cooper, but I've been down this road. I was been interviewed by the FBI. I had DNA done. I had hypnotic regression done by the FBI, all for this case. And
wow.
Yep. Because he told me. Well, I'll just tell you.
He told your brothers and stuff too, right?
He told my brothers. And I didn't know he told my brothers, and my brothers didn't know he told me, because after he died and after I listened to this show on Coast to Coast, before I contacted this DB Cooper investigator, I wanted to kind of clear it with my brothers, and I called them, and it was a weird conversation because I said, "Hey, did Dad ever bring in anything about a hijacker?" And he said, "Yes, he told you." I'm like, "Oh, thank goodness, yeah." So. Yeah, he told the brothers. That's all he told. I don't think he told anyone else.
So what happened to the money?
That is the one
or something.
That is the one question that I did ask him when he told me, and he took me over to this file cabinet, took out some keys. He showed me the keys, and he said, "These are the safety deposit box keys up in Canada where the money is."
And.
That was it.
That's it. So it's in Canada somewhere now.
Well, this investigator's been to Canada many times trying to access this money. I think they believe they know where it is, but because my dad has passed away, they're having to work through his wife to try to get access. And then, so it will be interesting. It will, but he certainly had the credentials for it. He was a special forces guy. A paratrooper type of guy. He was a badass. I gotta say, he was a badass. So one time when I was 4 years old, this was probably exactly 1 month after the hijacking, he showed up on Christmas Eve, and he came over to me. He was wearing a jacket, and he pulled out bundles of cash. It's one of my first memory of money was my dad pulling out bundles. There are those bundles with the wraps around. There had to be 20, 30 something $1,000 just that he showed me. This was in 1972. Where would he have possibly got that money in 30 days after the hijacking? So it's an interesting experience. It's kind of a fun thing to think about. I hope one day they really solve it with DNA or fingerprints. I don't think they're going to, but when the book comes out, I'll be interested to read it.
Did he say why he did it? Did he have a grudge against the government or something, or the airline, or?
I think that was part of it. And I don't think it was a grudge against the airline. I think it was a little bit of grudge against the government for what he did when he was in Vietnam, because he was in Vietnam for 3. And he was literally the worst person in the world with money. He was a gambler. He had problems with my mother, always about money. Strange that I got into this business, right?
Maybe not so much. Maybe
not so much. But I'll tell you one thing. 6 months after the hijacking, my dad had billboards put in my city. Teresa Gossett, I love you, come back to me kind of stuff. Those aren't cheap. So I think part of it maybe was trying to patch things up with my mother because she couldn't live with him because of money issues. So I guess that's maybe a way he went to try to get money to fix these issues.
Wow, that's fascinating.
Crazy, huh?
Yeah, amazing. Yeah, because I had heard about it on the radio. I knew the story, and I was just like, oh my goodness, that's a wild thing. So what did your brothers just said, he just sat them down and said swore them to secrecy, and that was it?
Yep.
Oh, wow.
Yep. Yeah, there's so many stories I could tell you. On my YouTube channel, in the interview section, I was interviewed by a DB Cooper investigator. It's 2 hours, maybe 2.5, and we get into
I saw one interview.
We get into the real nitty gritty of all the stories. So if anybody's interested, it's on there. They can listen. It's really long form, and I get into all the details of it. But
cool. Yeah, I didn't listen to the whole thing, but I just listened to a little bit of it. I was like, gosh darn it! I just interviewed this gentleman, and this is this really cool thing, and I wanted to call you back. I'm like, it's 11 at night. I can't call him back. That's interesting. But yeah, fun to talk to you, and it's interesting. Like, I ended up just kind of finding you on YouTube, and I think that like we can kind of help each other out, because there's most YouTube. I just saw a stat today actually that 98% of YouTube is music videos, and the other 2% is mostly 13-year-olds. So it's like we have a little spot on YouTube of there's not that many traders on there, but I don't think that people can watch both our channels and it doesn't take away at all from either of us. So
no, because we do totally. That's why we have a good relationship with this. I mean, we both trade, but we have our own niches. So everyone, please go and subscribe to David's channel. Let me make sure I have. Well, I know what the channel is. The channel is Famis Dave's on YouTube, and but the one I was looking for that I wanted to make sure I got was the Famis Dave on Twitter also, if you like to follow him there. But man, it was great having you on, and I'm glad we did this, and it was fun talking about VIX, and it was fun talking about the market, and fun talking a little bit about my dad.
Certainly, and I'm honored that I'm the first one. Hopefully, there'll be
you are the first one, because you're my VIX specialist. That's why.
Very cool. Very cool. All right. Well, it's always a pleasure. I guess time will tell what happens with this market moving forward.
Yep. Well, we will see, and we'll have to do this again. And thank you so much for your time. I appreciate it, Dave.
Yeah. Thank you. Thanks for having me, Greg.
All right. We'll talk to you later. Have a good weekend.
See you. I'll talk to you soon.
U.S. government required disclaimer. Stock, options, futures, and Forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.